The gold price has had a record-setting year, hitting an impressive 26 new all-time highs in the first half of 2025. It touched $3,500 per ounce in April, and this month it broke through. While experts agree the yellow metal has a strong long-term outlook, the summer months brought a period of consolidation, leaving investors wondering what will drive its next leg up. I've been asking market watchers that question, and we're going to get into the factors they've identified as potential triggers for further gains in gold. But first, let's take a look at what brought the price to its current level. By far, the main element mentioned in the conversations I've been having is buying from central banks, which have amped up their purchases in recent years, accumulating over 1,000 metric tons of gold annually for the last 3 years. Here's Brien Lundin of Gold Newsletter summing up why central banks want gold.
But the thing is, we have to recognize the trend. And the trend of ever easier money over decades and decades, really going back to even the 1960s, and ever greater debts created, both sovereign debts, U.S. federal debt, and individual and corporate debt. Those debts can't be serviced at current interest rates. The interest rates have to be below the rate of inflation. So that's, a negative real rate environment going forward as long as this monetary regime is in place. So that's the big driver. And that has been driving central bank buying, both the debt situation and the dollar weaponization that we saw beginning in 2022 has driven central banks to diversify into gold, really at the sake of the dollar and at the sake of the euro. The gold has surpassed the euro in central bank holdings and is now taking aim on the dollar. So that's the trend, and that's going to continue.
Also putting wind in gold's sails are global conflicts, tariff tensions, and widespread uncertainty, all points that boost the precious metals' safe haven appeal for investors. With all these positive influences already in play, it's tough to know what will take gold to the next level. But right now, interest rate cuts from the U.S. Federal Reserve are in focus. The Fed is widely anticipated to make a reduction when it meets later this month, and those expectations are already providing fuel for gold. Here's what Tavi Costa of Crescent Capital said about interest rates.
But if you take a longer term view, of which I think is what you're asking me, then clearly Trump is in his process to get majority of the governors and of the Fed as supporters of his agenda. And he's got no option but to lower rates despite where inflation is. And so I think that is where will likely catalyze the next movement.
Tavi went on to say that he sees a major decline in the US dollar and a corresponding rise in the gold price.
I think we're going to see a beginning of a long-term decline in the US dollar versus other currencies, i.e. the DXY index, to be very specific, in my view, is on the verge of a major collapse from a resistance or I should say a support line that goes back all the way to the global financial crisis. If we break that, of which I think we will, it will, in my view, really unleash what it could be the beginning of a long-term decline for the dollar. That will unleash a movement in the gold price most likely, but also other things that have been sort of waiting to see how this is going to be working out. And investors, you can act ahead of that, or you can wait to see the confirmation. The real money is made prior to the move, not after.
What else could spark a fresh rise in the gold price? The return of Western investors is one possibility. With the stock market still delivering and Bitcoin attracting attention, involvement from this demographic is minimal. Here's how Adrian Day of Adrian Day Asset Management explained it.
But the next move, it seems to me, is with North American investors, not the Ray Dalios and Bill Druckenmullers and so on, but ordinary, not just retail investors, but investors, family offices, small institutions, investment advisors telling their clients, money managers, etc., all of that. So I think the next leg is going to be the North American investors who've really been out of this market, as you know.
Rich Checkan of Asset Strategies International also mentioned the importance of Western investors, saying that their entrance will have a huge impact on the gold price.
So for about 3-4 years now, I've been saying that gold at all-time highs is dirt cheap. Silver is even cheaper, well below all-time highs for silver. And the reason I said that 3 years ago, 2 years ago, last year, and now is the Western investor still not in this marketplace. And when they get in, so European investors, North Americans, when we get in this market and start buying, not selling like we are right now, we start buying, it's going to make a huge impact on the price. And they're not in it. I've got a couple indicators that dictate to me that we are not seeing investment buying right now.
The two indicators Rich was referring to were the gold-silver ratio and premiums. He said that when the gold-silver ratio gets under 80 and continues falling, and when metal premiums start increasing, that's when he'll know that Western investors are getting involved. Coming at the question from a different angle, Jeff Clark of the Gold Advisor said for him it's less important to predict the next gold driver. Instead, he wants to be prepared for when it happens.
There's so many different factors. What I'm focused on, to be honest with you, Charlotte, is I'm focused on making sure I'm ready for whatever that may be. And what that means for me is that making sure I own enough of physical gold to make a material difference or have a material impact and a significant hedge in place for myself, not just, the business and my portfolio, but me personally and the family, just having that in place so that you're protected, whatever it may be and whenever it may come.
I'd also be remiss if I didn't share comments from Rick Rule of Rule Investment Media, who often reminds investors that gold has actually been rising for decades.
When people ask me when the gold price is going to move, as you know, I say the year 2000. It's up 9% compounded annually for 25 years. Pretty good record. And they like more dramatic moves, which they've begun to enjoy. My thesis is very simple. My thesis is that the gold price moves relative to people's faith or lack of faith in the maintenance of their purchasing power in fiat currencies, primarily the US dollar. I believe that as a consequence of our debt, our deficits, and the unsustainability of our entitlement program, arithmetic unsustainability, that the US dollar will lose 75% of its purchasing power over 10 years, just like the decade of the 70s. I suspect that the gold price will more or less mirror the deterioration in the purchasing power of the US dollar. Arithmetically, if you believe that there's a causal relationship, if the US dollar declined by 75%, it suggests that the gold price could move up fourfold. Will it be threefold? Maybe. Will it be fivefold? Maybe. What isn't in dispute to me is that absent a real sovereign default, the US dollar has to lose 75% of its purchasing power to make the on and off balance sheet obligations of the US government serviceable.
I'd love to know what factors you think will be behind the next leg higher in gold, so leave a comment below with your thoughts. You can also check out the video description for links to the full interviews with all the experts mentioned. We'll see you next time.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.